Okay, so I'll just repeat this again. So next week on Monday and Tuesday, which is 21st and the 22nd, we will be covering on substantive procedures. And then my replacement class will be on Friday night, which is on the 25th. And on the 25th, what we are going to be doing is basically covering on discussion of MCQ. Okay, so I hope that you guys can actually access your Timba flags and actually attempt the MCQ questions on the Timba flags that I have uploaded. Okay, so whatever questions that you guys have attempted and you guys are not sure of, those are the ones that we will be discussing in class. Okay, so maybe I can just bring you guys through the Timba flags for a little bit. Okay, so if you guys look into your sprint class punya Timba flags ni right now, okay, I have uploaded a few class materials. Okay, so AA MCQ 1, 2, and 3 ni, okay, these are the ones we will firstly discuss in class. And then basically for the MCQ Kaplan questions ni are for you guys to attempt yourself. So I have also included the answers for these Kaplan questions. So basically on that day, what we are going to be covering is mainly these 3 MCQ first, and then whatever questions that you guys have on the Kaplan that you're not sure of. And other than that, maybe on that last Friday, we are going to focus more on audit report and audit opinion. Okay, so let's go into today's topic. Again, we are continuing on internal control. Okay, before anything, today I'm going to use the additional internal control questions. Nipun, you guys can get it from the Timba flags here. Okay, under class materials, just click on the additional internal control questions because that's what I'm going to be using for today's class. But before that, let's just kind of like recap a little bit, okay? In case some of you guys baru datang today, okay, let's recap on what is the exam technique when we are answering internal control. So again, we have to firstly see, is it a deficiency or is it a key control that the question is asking for? If it is a deficiency, it is a negative, okay? Key control is basically the positives, the good key control, the good controls that the company actually is implementing, all right? So when we are explaining on our deficiency or key control, make sure to present your answer in a way where we firstly copy paste whatever deficiency and key control from the scenario, and then we will talk about what is the direct implication of this deficiency, and then you can actually bring in the general implication. So the general implication here, I have actually already put in some examples for you guys to kind of get an idea of what the general implications are. All right. The reason why we present it in this way is that I don't want you guys to be confusing between the direct implication and the general implication. Okay. Most of the time, people will put in the general implication without the direct implication. So actually, the most important point for you to get marks is at the direct implication here. I think even if you omit this general implication pun, sometimes they will still give you the marks as long as you have this direct implication. Okay. And when we are talking about recommended control, we have to be specific as we can by focusing on these 4 points, just who, what, when, and who will be reviewing this control. All right. So yeah, on test of control, we usually use this term of ROTI for you guys to get an idea of what procedure that we can actually do to test these controls. And again, your answers have to be related. So your recommended control has to be related to your deficiency. Okay, and test of control you will be related to your answer on recommended control. Okay, so are you guys ready for us to move on to the next question? To our first question of today, which is Pomeranian Co. September-December 2021. Okay, so I want to start off with these 2 questions, Pomeranian ni dengan Snowden, because it tests like on a few different internal controls. For example, like Snowden ni ada NCA punya system, they test you on payroll system and sales and bank. So we are covering a range of different systems here. Okay, instead of just focusing on one. So at least you guys kind of get to cover a little bit of each system. And then I want to proceed if we have enough time. I want to attempt this question 3 on Castle Career Co. So this question here, it focuses memang fully on payroll. This question entirely tests on the direct control and deficiencies of the payroll system. So this question is very, very specific on payroll. So if you do not have clear understanding of the payroll system, you will find difficulty in answering this question. So I will reserve this for the last question. Let's firstly start off with Pomeranian Co. Okay, so they ask us to identify and explain. Okay, we will highlight the verbs. Identify and explain 8 deficiencies in Pomeranian's internal control. Again, when they ask us to explain, we are basically talking about what is the direct and general implication, or what is the risk. What is the risk of this deficiency in internal control? Okay, I don't know how to move this. Okay. Okay. So, and provide a control recommendation to address each of these deficiencies. Again, we have to highlight those 4 points, remember, guys? So it is, we have to talk about who, what is the procedure, what, when, and then who will review this. Okay, so can I give you guys just, because it's a very short scenario, can you guys just highlight? I'll give you guys 5 minutes just to highlight and just read through this scenario. So by 8 o'clock, let's discuss in more detail on this question of Pomeranian code. Again, you guys can access these questions in your Timba Flex. Okay, see you guys at 8. Okay, guys. So now it's 8. Let's discuss on the question. But first, can I ask you guys how many internal control deficiencies that you guys found from the question? While I share my screen. So I don't know about you guys, but I actually found 10. Okay, so even though the question asks for 8 usually, they will always have more than 8. So when you guys are actually attempting your question during the finals, before you actually start actually putting in your answer plan, you should assess first. Assess all the points that you've highlighted, and you want to kind of confirm which points you think that you are more confident in. Okay, because usually there will be more than 8. Okay, so first things first. Okay, the first is basically on the credit limits are only. Yeah, the credit limits are only. Hold on. You guys see my screen? Okay, so credit limits are only changed when a customer requests an increase. So what is the risk here, guys? What is the implication of this? Basically, the implication is that if this credit limit is not regularly reviewed, then it may be that the credit limit could be out of date. Okay, so yeah, Alia said credit limit is irrelevant, can be irrelevant and out of date. So this is the direct implication right now. The fact that the credit limit may be outdated. So right now, what is the general implication here? Is basically there is a risk. Okay, there's two possibilities here. We are basically either setting the credit limit too high. So if we set the credit limit too high, this could lead to potential irrecoverable debts. Okay. Or if we are setting the credit limit too low, then maybe this could be a potential loss of revenue here. Okay, so this is how you guys will answer. Okay, either one is fine. So you can either talk about the credit limit being too high or the credit limit being too low. All right. So basically, again, when we are doing the control recommendation, guys, basically deficiency is what they did not do or what they are doing wrong. Recommendation is we ask them to do it. So right now, they are basically not reviewing this regularly. That's the issue, right? So how can we word our control recommendation? Okay. How can we word our recommendation? Is simple je, guys. Basically, we will just tell them right now, okay, kalau orange ni pula is the recommendation. We will ask them to review. Okay, we have to ask them to review the credit limit regularly. Okay, and then this has to be evidence by sign. Okay, and then again, we have to be very specific, right? We want to talk about what, who, when, and who will review. So right now, who will review this? Okay, let's just put by a responsible official. Responsible official such as the sales director. Yeah, all right, Alia. Okay, so that's the first point here. The second point, okay, copies of the GDNs are sent to the sales ordering department and the finance department on a weekly basis. So in this sentence here, what is incorrect about this statement here? Okay, which word in this sentence? Yeah, it's weekly basis. So it is supposed to be sent on a daily basis, correct? So right now, let's talk about what is the implication of them sending this on a weekly basis. Okay, the GDN are sent to the sales ordering department and the FD on a weekly basis. So this could result in late invoicing to the customers. Okay, in customers being invoiced late. This is the direct implication. Okay, why are they being invoiced late? Is because the finance department, if you guys remember, the finance department do you guys still remember how the three-way matching, this is for sales. Okay, sales, this is purchases, okay? Purchases color biru lah, okay? So when we are doing the three-way matching then, three-way matching. Okay, three-way matching. So what is three-way matching is basically the documents that the account or finance department will match, baru they will recognize this sales or only then they will recognize these purchases. So for a sale, they will basically look into these three documents, okay, which are Okay, what are the three documents? Firstly, we have the purchase order. Second, we have the sales order. Lastly, we will have the GDN. Only then they will record the sales. Okay. For a purchasing, kalau purchasing department pula, it's slightly different. We will have the accounting department will basically firstly match the PO and then the GRN and lastly the purchase invoice. Okay. Only then they will record the purchases. Okay. Alright, so basically that's why when the GDN is not sent to the finance department, they cannot actually record the sale end and they will not basically invoice the customer, send the sales invoice to the customer. Alright, so this could result in customer being invoiced late. So what is the general implication here? Okay, it may be that we have some revenue cut-off issues because there is a delay in the invoicing. Okay, revenue cut-off issues or maybe receivables and revenue may be understated. All right. So what do you guys think is the recommendation? What is the recommendation here? And we just basically ask them to send the GDN. Send the GDN on a daily basis. All right. That's pretty much it. And then another thing that we can say is maybe we want to undertake a sequence check. We want to undertake a sequence check on this GDN. Again, what is the purpose of a sequence check? Is basically for us to, technically this is a form of monitoring. Basically, this is when we will, to ensure completeness. To ensure completeness and ensure that no GDN is missing. Okay, so the next point, guys. Okay, next is the credit controller is currently on maternity leave for 6 months and no one has taken over her duties. Yeah? So right now, if nobody is taking over her duties, what is the duty of the credit controller, you guys? Let's think about what is the duty of a credit controller. The duty or the responsibility of the credit controller is basically for us to chase outstanding debt. So right now, if no one is basically taking over their responsibility, that means that no one is monitoring. Right now, we talk about the direct implication. So sekarang no one is responsible for monitoring and chasing these outstanding debts. Monitoring and chasing outstanding debts. So baru we will basically go into the general implication. Okay, the general implication is the one that is in purple. Okay, the general implication where there is a risk of irrecoverable debts. Risk of increased irrecoverable debts. Okay, so a recommendation that we can have is, okay, there's two recommendations that I would say that in our head, we would basically think of right now, but we're asking the company to do it, right? When we are talking about recommended controls. So we may think like, okay, we just ask the company to employ a new credit controller. So this is the first option, but the more practical option, okay, what is the more practical option is basically for them to actually, what they can do is they can actually train an alternative member of the finance department. Okay, so alternative member of the finance department can be trained to take over this role of chasing outstanding debt. Okay. Moving on is on the NCA. Okay, when we're talking about NCA NCA system, the main issue usually is basically on the authorization of this non-current asset. Okay, so the main issue is basically on the approval, right? So when we are talking about any capital items, usually how it is done I just want to briefly explain. Whenever there is a capital item, usually the board will basically set it works similarly to a bonus like I explained recently, right? So the board will usually give like a certain capital expenditure budget, CapEx budget that is set by the board. Okay, maybe they set the CapEx budget, for example, at 100,000 per department. Okay, and then maybe the board will also allocate, let's say they will actually kind of like allocate a range. Let's say if any purchases are more than 100,000, has to be approved by the board. If anything that is, let's say, less than 100,000, maybe can be authorized by the head of department, maybe. Okay, so this is usually the board will set this budget, and then it's usually the head of the department or the director who will basically be the one who is authorizing this according to this budget here. Okay, so head of department or the director usually. Okay, so let's look into the question. Okay, so right now is the same thing. The capex budget is set for each department. Board approval is required for any capital items costing more than 0.5 million. So, yang reconciliation. Oh yeah, I tak perasan. I dah highlight dah. Okay, sekejap Alia. Let me just finish explaining ni lah. Lepas tu we go into the recon balik. Thanks. I dah highlight but lupa nak explain. Okay, so board approval is required for any capital items costing more than 0.5 million. So capital expenditure below this level can be authorized by the relevant head of department. So even though this is okay, however, this amount of 0.5 million seems to be a significant amount, right? Okay, 500K is a large amount of money. So what is the risk here? What do you guys think is the direct implication in this case? Okay, basically, the direct implication here is that it could be that this capital expenditure below 0.5 million are being purchased for non-business use. So boleh je right now kan, because I as the head of department, I know that the policy is that only items that cost more than 0.5 million, basically 500K, will require approval. Boleh je I buy something that is 499K for my own personal use. Anything 499K and below, right? So basically the risk here is that there is a risk that it is used for non-business purposes. There is a risk that capex items below 0.5 million are purchased for non-business. Okay, so this can lead to dia punya general implication of reduced profits or additional costs. Okay, reduced profit, additional costs, anything lah. Okay, so going back, before that, so what can we recommend right now, kan? We will ask them, right now the issue is on the significant amount here tau. So what can we recommend is maybe we can recommend to them to basically reduce this authorization level to a more appropriate or to a lower amount. Yeah, correct, Alia. We will basically ask them to lower the authorization level to a lower amount or to a lower or more appropriate amount. So maybe you guys can give an example such as maybe 25K. Okay, so amount in excess of this 25K should be approved by the board. Okay, so all right, another thing that I missed out is basically on the reconciliation. Okay, so the receivable ledger control account is performed. However, the issue right now is that the recon is only reviewed if there are any unreconciled differences. Okay, there is a risk that basically there could be errors that cancel each other out. Okay, if there is no review, these errors will not be identified. Okay, so basically we can say that recon could still be incorrect either due to error or manipulation. And if this is not reviewed, these errors will not be identified and resolved on a timely basis. Okay, again, that is actually the purpose of a recon. Okay, again, I want you guys to put this in your head because they will always like to ask you on recon, but they might tukar-tukar tau, they change. So like this scenario kan, they ask on receivables recon. Maybe the next year question, they ask you on bank recon pula. But again, what is the purpose, guys, of this recon? It's the same thing, for us to identify and resolve errors on a timely basis. Okay, so recon could still be incorrect, and then we state that the errors may not be identified and resolved on a timely basis. And then another thing for the general is basically, if you just do the recon and then nobody is reviewing it, and then there may be errors, what is the purpose of us doing this recon in the first place, right? So this will reduce the effectiveness of the recon. Or maybe you can say that the receivables balances may be misstated. Okay, so what do you guys think is the control recommendation here, guys? For this point here on the reconciliation. What is the control recommendation? Okay, again, we are just asking them to do what they are not doing. Okay, can you guys suggest what is the control recommendation? Yeah, recon should be done by should be reviewed by a financial controller. Okay, let's be very specific again. Who, what, when, and who will review. Okay, so sekarang ni tak ada review. Basically, the issue right now that we're going to talk about is the recommendation is basically we have to firstly talk about who, right? Who is maybe the financial controller. Okay, and basically review, what is the review? When is on a monthly basis, correct? Okay, and then the fourth point is we have to talk about the evidence by signature. Okay, so this is how your answer will be complete, okay, by actually including at least 3 of those points that I have stated, right? What, when, how, and who will review. So the fourth point, who will review to, is optional depending on the scenario. Okay, so the next point is Pomeranian Co. has a head office and 5 factories, each of which includes a warehouse. Okay, so sekarang ni there's 11 sites, right? Because every factory has a warehouse. So 5 times 2 plus the head office, so that's 11. Alright, and basically this is their internal audit policy, which they have to carry out a comparison between the assets recorded and those that are physically present over a 3-year cycle. Okay, so what are we testing when we are basically reviewing this? Why do we carry out a comparison between the assets on the register and those that are physically present? Why do you think we are doing this? Yes, we are testing existence. Correct, Alia. She on a roll tonight. So yeah, macam basically we are testing on existence. Okay, so if right now kan, in this case, 11 sites kan, they have 11 sites in total. As at the end of the year, they have only completed 1 factory and 1 warehouse. So if 1 year estimated, they will basically cover 2 sites. If they have 11 sites, this will take more than 5 years tau, right? So basically, their policy is they want to cover all 11 sites within 3 years. So right now, according to their current internal audit program, and internal audits scheduling ni, basically this is not possible for them to do all 11. Okay, so let's talk about what is the risk of this. Okay, basically, firstly we have to explain. And like I said just now, if they use this current basis, it will take more than 5 years. More than 5 years to physically verify the 11 sites. All 11 sites. Okay, so what is the risk when the NCAR is not physically verified? Okay? If they are not physically verified, there is an increased risk of what, guys? If it is not physically verified, there is an increased risk of asset being misappropriated, satu, and ya Mimi, obsolete asset. Okay, obsolete assets, risk of assets being misappropriated, and yeah, Alia is also correct. They may include items that have gone missing or basically have not even existed in the first place. Risk of assets, being misappropriated. Okay, so again, when we are thinking about the recommended control guide, basically right now, their issue right now is on their policy. Okay, their policy or basically their program of visits diorang ni, they want to complete it within 3 years and it is not possible. So right now, we will have to make sure that the internal audit actually reviews this program of visits for them to make sure that they can visit all 11 sites. All right. Basically, how can they do this? Maybe they can allocate more resources. Okay. So IA will review its program of visits because to assess if additional resources or additional staff can be allocated to ensure that all 11 sites are visited. 11 sites can be visited within the 3 years, okay, to ensure that physical verification of all assets could be completed. So any assets which cannot be located, it should be written off. Okay, so can I just give you guys some time to try to attempt this yourself? Okay, so that's how many points here, guys? Okay, 1, 2, 3, 4, 5, 6. Okay, that's 6 points, right? Okay, so we've discussed it. I am not going to turn on my I'm not going to share my screen because I think I've explained it. Macam cheating lah if I leave this screen, you guys are just copying my answers, right? Okay, so please attempt this using the presentation method that I taught you guys, which is the deficiency from the scenario. What is the direct implication is what, and what is the general implication? Even here pun I've highlighted it in different colors. I mean, I've like used different colors. The blue for the direct implication, purple for general, and orange is the recommended control. Okay, so macam cheating lah pula kan. So I'll give you guys since it is 6 points. Uh, since it is 6 points times two. Can I give you guys 20 minutes? Okay, I'll give you guys 20 minutes to attempt these 6 points. Since we have discussed it, I hope that you guys can maybe like complete it within this 20 minutes. Okay, so I'll see you guys at 8:46. All right, time is up, guys. Please submit your answers in the Padlet. I've already put in the link in your Zoom chat. Still waiting for your answers, guys. It's okay if you guys cannot complete the 6 points, just submit whatever you guys have been able to complete because the most important is how you guys answer it. Okay? And another thing that I want to ask you guys is what do you guys think of okay, when we are attempting questions like this in your spring class, it's important for me to also note like what kind of learner you guys are. So I cannot like specifically try to meet all of your like your different learning methods, but I would kind of want to know like which one is best for you. Is it better for us to do it together, like we type together, or is it better? I think that it's better for you guys to attempt like this and I mark your answers because at least you guys actually try it instead of just watching me, right? But yeah, I want to know what is most effective for you guys. So if you guys have any suggestions, just feel free to like write in the chat or just like PM me what you guys think is best, especially in these spring classes. I want to make sure that this short period of time of actually our classes is only 7 classes, right? Yeah, there's only 7 classes, but I want to make sure that these classes are really effective for you guys. Okay. So yeah, I've noticed that some of you guys have uploaded. All right, thank you guys. Let me share my screen. Okay. So somebody said I like this way as I'm I'm slow typer actually. Okay, that's true though. Actually, I know that I realized that I actually type like very fast. So it's true that there's that concern that if I were to type and then you guys follow me, it may be too fast that you guys cannot really catch up. But yeah, so I think I want to try like a mix of different things. Like at the same time, this kind of learning method will only be effective if you guys actually attempt it. So I hope that all of you guys who are let's say not present in class and watching my recording will also attempt this at your own time. Okay. So let's look into the answer. Okay, maybe kita try tengok Amrit punya. Okay, so first the credit limit are only changed. Okay, this indicates the sales director does not regularly review its credit limit of its customer. Okay, it could therefore be outdated. Okay, this correct would lead to an increase in its bad debts. Okay, I can give this one mark here. Sales directors should review the credit limit regularly, such as on a monthly basis, to ensure its accuracy over time. Okay, so here, this is good because he covered on who, review the credit limit is what, and when. Okay, so this is a very complete answer. Good job. The copy of the GDN, this would result in late invoicing, which lead to revenue cut-off issues. Okay, so again, this is the direct implication and this is the general implication. Right, the GDN should be sent on a daily basis to ensure the upkeep between the sales, ordering, and the finance department. Okay, maybe this is, I think, a more accurate wording for this is to ensure that the finance department can actually match this. Finance department can match the GDN with the sales order and invoice the customers on a timely basis. But this answer is still acceptable. Okay, sequence check. This is 1 mark. Okay, so this is 1 mark here. 1 mark. Okay, this is correct. The financial controller should review the reconciliation at least on a monthly basis. Okay, another thing that we want to talk about is basically how do they actually investigate the reconciling items. So dekat sini it's 0.5 marks because another thing that you can add here is maybe the financial controller with any reconciling items should be investigated by discussion with financial controller. Financial controller. And another thing that you forgot to say is review the reconciliation on a monthly basis, and this should be evidence by way of signature. Okay, so this is a good attempt. Thanks for submitting your answer, Amrit. Okay, maybe I'll take one more answer here. Okay, let's look in Haikal's answer. You guys rasa like suspense tak if I'm like reading your answer in class? I don't know. Actually dulu I pun was also like a student of Timba. So I feel like when the lecturer buka my answer in class rasa macam suspense. Okay. So but I don't know about you guys. Rasa dia tak keluar. I have to download. When a customer credit limit is not regularly reviewed by the management. Asal dia macam keluar like this? Is it I think it's because of I download the iPad kot. Okay, I only then change credit limit is not regularly reviewed before the customers are being copies of the GDN. Kat sini, I think you omitted the fact that here the direct implication is that what is the direct implication is that the credit limit may be outdated. We didn't say that the credit limit may be outdated and this could lead to irrecoverable debts. So I can only give you 0.5 marks here for the copy paste from the scenario. Before customers are being granted the credit limit, it's required for the sales director to review the credit limit. Okay, I can only give you 0.5 marks here because you did not specify in more detail. So sekarang you have talked about who, you've talked about what, you didn't talk about when. Okay, they have to review this on a regular basis. Okay, and this should be evidenced by sign. Copies of the GDN are sent, okay? So the customers may receive the invoice late, okay? So again, what is your general implication here? What is your general implication here? But I think I can still give this a solid 1 mark here because you've already stated that the customer may receive the invoice late. A copy of the GDN are needed to directly send to the ordering and finance department once the good has been dispatched out. Okay, this is not specific enough because right now the issue is that they sent it on a weekly basis instead of a daily basis. Okay, so dekat sini you have to be very specific on the 4 points. Remember, who, what, when, and who will review. Okay, so next is this tend to impact the cash flow. Oh, is this related? You relate Okay, general implication. I see. Okay, so these tend to impact the cash flow of the business, which tend to impact going concern status since the payment received from the customer are late. These tend to impact the cash flow of the business. Okay, another issue right now kan is that we have the tendency to talk about the business risk tau. Okay, so boleh lah, we can talk about how we are impacting the cash flow. Tapi I think that you dah confused between audit risk and the internal control risk. Because right now, your answer here sounds a lot like audit risk juga. Okay, you can say that this will impact the cash flow of the business. This is acceptable, which tend to impact the going concern status. This is kind of like a little bit irrelevant to the case right now. Okay, when the invoice is late, the issue is that the customers are not being billed on a timely basis. So the issue right now is the receivables may be understated, maybe misstated, or there is a revenue cut-off issue. Okay. Next is a clerk reconciles the receivables ledger. Okay. Recon have been determined if the error which are recorded in the current year financial accounting. I'm stopped. Don't really understand your sentence here. Okay, basically the issue right now is that there may be errors that have gone undetected, even though there are, if basically they perform this review and there's no review, they perform this recon but there's no review, it may be that this recon is not being performed properly. Okay, Miss pasal revenue cut off issue tu kena elaborate lagi ke cakap gitu je dah enough? Just like this pun actually is enough. Okay, so I'm tanya, do we have to elaborate more on this revenue cut off here? So right now, we actually don't have to. The thing about general, okay, this is basically right now, this is the general implication. Okay, so even if you guys do not elaborate that much on the general implication ni can be just a 1-line sentence tau. It is okay as long as your direct implication you have explained clearly in accordance to the scenario. Okay, faham tak? Revenue cut off ni is basically the general implication. That's why we can just give 1-line sentence macam ni without explaining pun is fine. Okay tak Ain? So the next is basically, my financial controllers need to review the recon has been performed at least on a monthly basis. Okay, so you have covered the who, the what, the when. Okay, after review has been performed, it's required to place signature. Okay, I think you tak payah pun buat panjang-panjang like this. You just say this should be evidenced by sign. Okay, that's all. Stop dekat sini. Kat sini, if you have this full sentence here, you do not even have to say to prove the receivables or something like that. Okay, right now kat sini pun is already complete. I can give this 1 mark. Okay, so this is basically irrelevant. You can just say it is evidenced by sign. Okay, board approval, capital expenditure below this level, it tend to increase risk where non-related business expenditure has been incurred. Okay, tend to reduce. Okay, so next is, this is 1 mark here. It require board to reduce the amount which are required. Okay, to reduce the authorization level. Sini tak payah pun. Reduce the authorization level to an appropriate amount. Okay, maybe you can give an example, such as maybe 25k or such as 50k, whatever amount that you guys want that is lower, okay, to an appropriate amount since 0.5 million was too significant. Okay, so I think this is okay. I can give it 1 mark. Okay, so okay, I think that's all I will be reviewing. Can we move on to the next question? Okay tak guys? Miss, about the clerk yang perform reconciliation, is it a deficiency juga? Okay, right now, okay, this is also another thing yang sometimes people confuse. Okay, because the issue is clerk means they can still perform this kind of work tau. It's okay for clerks to perform this kind of work. However, there has to be somebody who is reviewing this. That's why it's more important, because right now kan, it's the clerk who is doing the reconciliation. So they may not have sufficient knowledge or experience. So there is a higher risk of this recon containing errors. Okay, but it's okay for the clerk to perform it as long as there is some senior personnel reviewing this work. Okay, Alia? So some things yang memang prohibited for clerk to do, okay, are like, memang tak boleh, they cannot amend the master data file. Right? Master data file ni siapa je yang can amend? It should only be supervisor and above. So other things like maybe setting discounts pun clerk cannot do. Okay. However, basic things like performing calculation, performing reconciliation, performing calculations, accounting for it in the books. This is all okay provided that it is reviewed by a senior personnel. Okay tak Alia? Okay. Do you guys have any other questions on this part here before I move on? Kalau senior clerk tak boleh juga ke Miss? For this one yang receivable ledger control account ni is it this one? Basically, I would say that tak boleh actually kan. If let's say kan, which question is it pasal recon ni? Okay, so recon ni, it memang have to be a senior personnel such as the financial controller, the financial manager. Okay, some senior personnel within the finance department will have to review this. Okay, benda-benda yang more small in nature, baru we can say like maybe senior clerk can review, but it's very unlikely. Usually it has to be like a supervisor and above who is doing this review. Okay, that's why in this case, the financial controller need to review the recon as been performed at least a monthly basis. If really you guys tak tahu who is this, you still cannot, you're not sure who you want to put here kan. Instead of you put the financial controller kan, how we can trick the examiner here, okay, we thought, okay, a senior personnel. Okay, senior personnel in the finance department maybe. In the finance department. Okay, nampak tak how you guys can word this? If you really don't know, we can say senior personnel in the finance department. Dekat sini it's very important for you to specify which department. Or another thing you guys can possibly say is a responsible official in the finance department. Okay, your wording actually plays a big role here. Alright? So I would say that if you want to stay safe, you can go with these 2 points here like this. Okay? But usually on this kind, I think that the examiner would not be too strict on it. Okay? It's not like a one answer kind of thing. So moving on. Can we move on to the next question, guys? Oh no, kita tak habis cover pun lagi that question. Okay. So the last few points here. Okay? Each of the 5 warehouse managers are responsible for supervising the inventory counts. Sekarang ni, the warehouse manager is the one supervising the inventory counts. So what is the issue here? Why cannot the warehouse manager be the one who is supervising? Isn't he the one yang should know better about the warehouse? What do you guys think? Tak independent. That's correct, Alia. Basically, warehouse manager is not independent. So right now, like I said just now, right, guys, when we are talking about the direct implication, and this is the direct implication, right? We want to explain in more detail. So what do you mean by not independent? What is the risk right now? Kalau they are not independent, it may be that there may be errors or fraud. Okay, macam maybe there are errors in the inventory count, or basically inefficiencies that may not be reported. Okay, because you think about it kan, this is dia punya department. They don't want to, there may be bias. They might be biased because this is dia punya department. I rasa dia dah hafal kot barang kat situ. So macam, even though they have the knowledge kan, there may be errors or inefficiencies that may not be reported. Okay, or basically you can just say that they may be biased, whatever. So what is the general implication here? Okay, what is the general implication here is that the inventory may have issues kan. So maybe there is a apa ayat dia? Basically, apa ayat dia tadi? Okay, so basically there may be fraud. Maybe fraud, or maybe there may be errors in the inventory record counts, inventory count records. Okay, so because they may want to hide any errors or discrepancies in the inventory because they don't want their department to be criticized. Okay, so what is the recommendation here is basically we want to make sure that the inventory count is supervised by an independent person. Inventory count supervised by independent person. Okay, so who do you guys think we can put here? Okay, kena cari supervisor from other department. That's correct. Or maybe okay, an option lah, like Alia said, we can use a supervisor from another department. Tapi I think there will also be issues there because like sales department punya orang tu tak ada kerja lain ke? I'm sure they pun busy with their own work kan. So we can actually call for the IA department. So this is basically where the internal audit department will come in, Yasmini. The internal audit department. Because they will be the ones who usually monitor all these stock counts. Okay. So next is the basis of the standard cost was reviewed by the production department approximately 2 years ago. Okay. The sentence yang buat dia salah is the fact that it is 2 years ago. So what is the risk here? Okay. Basically, there is a risk that the standard cost is outdated. Yes. So the standard costing may be outdated. Maybe outdated because they were last reviewed 2 years ago. So there is a risk that the cost may be misstated or outdated as raw material and wages costs may not have been adjusted for. Any changes in raw material and wages costs may not have been adjusted for. So the general implication is the inventory and profit may be misstated. Okay, so what can we suggest? Okay, again, we are asking them to do it right now kan. They are doing it 2 years ago last. So we want to make sure that a review is undertaken more regularly. The basis of standard cost tu based on market ke same industry ke macam mana? Okay, somebody asked me. So basically standard cost ni actually depends on the industry. That's why it also has to be reviewed. Okay, it has to be reviewed on a more regular basis, which is yearly. The basis of standard cost tu based on market. I mean, we follow the IS2. Okay, IS2 states that it should be measured at the lower of cost and NRV, right? So they have to continue to ensure that that inventory is being valued properly ke tak. Okay, get it, Mimi? So right now, basically, they have to make sure that this standard cost is being reviewed. So let's go, guys. First is who what, when. Okay, you rasa siapa, who should be reviewing this? Okay, right now we're talking about reviewing the standard cost, right? Okay, who do you guys think should be reviewing this standard cost? Do you guys have any ideas? Okay, maybe like we said kan, like I said, we don't have to go so in detail. So Azim cakap managing director, alright? Aisha cakap production director, Mimi cakap warehouse department. Okay, so we've got a range of answers right now. Okay, so let us just try to make this more general. Okay, so let's just try to play safe here, and I'm going to say this should be undertaken by a senior manager or personnel in the production department. Okay, nampak tak? As long as you guys state that it is a senior in the production department, kat situ pun is okay already. Okay, when we want to ensure this is more regularly, maybe we can suggest, for example, one at least annually. Okay, alright guys? This is one of the control recommendations. Another thing that you can do is basically compare, okay? Whenever we talk about standard costing pun, if you guys still remember your management accounts, kan we will do a variance analysis. Ingat tak management? Okay, so another thing that you can recommend is we compare the actual cost for material, labor, and overhead versus the budgeted. Why? To ensure that they are in close approximation. Okay, so next is basically, okay, this is the typical one. All members of this department have full access to the supplier master file data, and a monthly exception report of any changes or to the master file data is automatically generated and then filed by a purchasing clerk. So actually dekat sini, you can actually elaborate. This is the same point, but you can elaborate two things now. So the first thing here is that everyone in the purchasing department has full access to the supplier master file data. And right now, this exception report, okay, exception report is not being reviewed. It is just being filed away. Okay, whenever they actually state filed away, you have to question why they're not doing anything about it, right? Don't you guys also have things that you guys just file away because we just don't see it and we don't do anything about it? Same thing here. If they just file it away, basically they're not taking action. They are not doing the review. Okay, so let's discuss this together. Okay, so for things first, we want to talk about the full access here. Okay, so what is this risk if everyone in the production department can amend this data? What is the direct implication here? They may actually include fictitious suppliers, right? Fictitious suppliers. Yeah, so Atika said manipulation and Azim said the risk of fraud. Okay, you guys are correct, but that is more general. That is more on the general implication. Right now, we want to say that fictitious suppliers may be added to the payable system. No. May be added to the payables ledger system. Ledger system. Okay, so so Mimi cakap misappropriate changes to data. Basically, this is a form of unauthorized changes. Okay, so fictitious suppliers may be added to the payables ledger system. So another thing that you want to talk about right now is that this exception report is not being reviewed now. So to add on to this point, the exception report, do you guys know what is an exception report? Okay, after this I want to explain this because this exception report is something that will always come out. So this is a good recommended control for you guys. Okay, exception report may not be filed, is not reviewed. So if the exception report is not reviewed, then any unauthorized changes in the master file data will be unlikely to be identified. Okay, so now we can say the punya general implication is that there is an increased risk of fraud or manipulation. You guys see it? Okay, every time you guys are explaining on your test, on your internal control deficiency, make sure that your direct implication is clear. If your general implication is going to be usually a one word or a one line like this. Okay, so right now the recommended control, okay, I want to explain what is an exception report. Okay, they have like a few words for it. Again, exception report, first they either have an exception report or another word that they have is edit report or log of changes. Okay, so what is this report? Is basically whenever there is a change to a system data, to a data within the system, for example, this master file data. If there is any change within a master file data, this the system will automatically generate this exception or edit report that will basically detail who is the employee that made the change. Okay, what amount did they change? When did they actually make this change? Okay, when did they make this change? So the purpose of this right now is that we can actually investigate, okay, if there is any fraud, if there is any fraudulent changes, for example, this fictitious suppliers being set up in the system, right? Through this exception report, we can see, okay, who is the employee who actually input this fictitious supplier. So if there is an exception report, this has to come together as a pair with review. Okay, so this is compulsory. This exception report must be reviewed by a responsible official. If not, it will basically lose its effectiveness. Okay, guys? So right now, we will basically make sure right now the recommended control is the exception report. Let's talk about the exception report. The exception report must be reviewed by a responsible official. Okay? So maybe we can say, plus any unauthorized changes to the supplier master file, okay, should be investigated. Or another thing that we can say is basically right now, kan the issue right now is that all members of the department have full access. So another recommendation is basically we ask them to not do that lah. We basically tell them, okay, the amendments to the master file data should be restricted to those who are authorized to make changes to the data. Okay, simple answer, simple and clear and straight to the point. Correct, right? Okay, last point. Okay, before we move on to the next question, guys. On receipt of the purchase invoice, the finance clerk matches the invoices to the relevant purchase order and then passes the document to the FD for authorization prior to input. On receipt of the purchase invoice, the finance clerk, this is not a very clear point here, right? So, can you guys repeat for me, what do we usually match upon a purchase? What is the three-way matching that we usually do for a purchases? And just now I've already recapped on this, guys. What is the three documents when there is a purchase? Once these three documents have been matched by the accounting department, only then they will record. Okay, so first is PO, the purchase order, the GRN, and yes, the invoice. Okay, only when we have ticked this purchase order, this GRN, and this invoice, only then we will record the purchases. Okay, so right now, this scenario is saying on receipt of the purchase invoice, the finance clerk matches the invoice to the relevant purchase order. Okay, what did they omit here, guys? Basically, they actually omitted the GRN. So if they basically did not like match this with the GRN, what is the risk here? They did not match with the GRN. So what is the direct implication here? If they did not match this to the GRN, this could result in invoices being paid for goods that were not received. For goods not received. Okay, so what is the general implication? This would lead to increased costs to the company. Okay, so again, when we are basically proposing the control recommendation, right now we want to ask them to do it. We tell them, make sure you match the purchase invoice plus the GRN and the purchase order. Okay, so the details should be agreed prior to the invoice being input in the payables ledger. Okay, make sure that basically we tell them, make sure you have matched the purchase invoice, the GRN and PO before you record this in the payables ledger. Okay, yes, Mimi, match the invoice to PO and GRN prior to inputting it in the payables ledger. So are you guys clear on this question so far? Is it okay? So this is a more okay question, okay? So do you guys want a short break or should we continue to the next question? How are you guys feeling as at 9:20 right now? Because we are basically doing 3 questions, right?